Hi.
Hi, love. Okay. Good evening. Hi. This is your host again, Ray Teo from IQI Global Canada. And today we are so fortunate to have the manager of TD Canada Trust in Canada, Mr. Derek Wong. And he's here to give us some information about the financial institution in Canada. So people who wants to buy homes in Canada or investment in Canada, he's the best guy to see and to ask, right? So hello,
Hello.
Derek. Can you introduce yourself a little bit?
Yeah, for sure. Thank you, Ray, for bringing me over and I invited to present some of the mortgage advice or for your future investment or you're looking for your primary home to coming back in Canada. All kind of plans that I would love to share with you. And do we have to introduce our
Yes,
person?
yes, and of course we have Davina, one of my partner here in Markham. That's why we realtor in Markham, and she's here too today, so that she has lots of clients that have questions about financing. Right? People wants to buy properties in Canada. However, some of them do not understand how financial institution work in Canada. So they thought that they have, hey, I have 10%, I have 50,000, I can buy a house no matter what. But it's different situation. So that's why we have Davina here as well as Derek here, so that people who get into this live broadcast will understand more about financing in Canada
Right.
and also investment. So Derek, go ahead before. Oh, hello, Davina. Sorry, can you say hello to everybody?
Hi everyone, my name is Davina. I'm Ray's partner and very happy to see you again. And yeah, I bring a lot of questions for Derek today. So yeah.
Wow.
Okay, so
Thank you.
we'll let Derek talk about the special things that TD Canada Trust can offer today, right?
Yep.
To the
Mhm.
clients like investors from overseas or local.
Mm.
So okay,
Yeah. So let me start. My little background is I start with banking for over 10 years, right? And then I with TD, I've over 6 years in TDs. Focus on the mortgage or specialist role, and majority of people they are people are coming for they are buying their dream homes, they are buying their investments, but usually start with a dream home first, right? They have to live happy, in the house, and then they buying their investment after, right? But it really depends all client different situations. It's very custom made for every client. Of course, today I'm going to briefly to talk about a little bit about different kind of program which is fit on the client situation. But every clients have a very individuals, situations, right? Maybe wife is working in or full time in employees or under the big company, and husbands they might have for business for self, they own companies, or they have for also they have for investment in all around the place in Hong Kong, in China, in US, very different for very individual clients. But of course, let me generally talk about our we have what kind of programs that we have. Or and then the second topic maybe we can talk about like if you are not in Canada, you're non-resident, or you are Canadian working out of the countries, right? Not in Canada. So how can we apply for the mortgage? So maybe how about we focus these two topics first?
sure,
Yeah,
excellent,
briefly.
yeah.
Okay, so basically in TD Bank, and mostly in every bank like in Canada, right? If you are considered as a non-resident, meaning that your income is came from outside. Doesn't mean that you are Canadian, you still are Canadian, or you are not Canadian, right? So your money you're making outside we consider as a non-resident programs. So non-resident programs is are they are very focused on minimum down payments is 35% of your purchase.
Even if you are Canadian?
Yes.
So-
If you are Canadians working outside, your incomes, are reporting outside.
Yes.
Yes, it's
Oh,
considered as a
okay.
non-resident or
Non-resident.
non-resident. Some cases, like depends. Oh, wife. How about my wife? In Canada, right? Husband working in Hong Kong,
Overseas,
China,
yeah.
or outside. Okay, so how do we consider like that? So it depends who is the majority income coming from. Majority income came from his husband, so we have to use 35% of the down payment. That's minimum.
Okay.
For every other bank is same. This is this is must 35% down payments. And then if they are moving back, like they are planning to coming back, they're using the Canadian income, that's the different stories.
Okay.
Yeah. So basically, they have to prepare 35% down payments, and the money has to be in Canada
I see.
by the time they are, doing purchase, or even though they're doing purchase, put an offer in, it is fine, right? But the time they are applying, that they start the application, the down payment 35% must be in Canadian banking. Any banking in Canada, which is fine. And then so right after they have to prepare some of the things. They are focused on bank. They are focused on the income part. They are focused on the down payment part. They are focused on the credit part.
Okay.
Of course, I'm not staying in Canada, right? Mostly in let's say in Hong Kong, make example, right? In Hong Kong, so how can you check my credit card? You need to provide to a Canadian side. You need to usually go to our TransUnion or pull up the credit report, go on Hong Kong website, TransUnion and then pull up the report, prepare this report. And then the second things that are your income. So we need very straightforward. Basically, we need your most recent pay stub, most recent two pay stub, and then we need the letter of employment. So which is ask your company from the HR department to print out the letter of employment, which is focused on how long you've been working this company, how is it a full-time minimum hours. Contains how much year you're making in a year. So that letter of employment, and then the down payment part. Down payment part is if you have your down payment came from yourself, so we need to show 6 months in Hong Kong bank statement. So your money has to be in an account for at least 6 months, and then we can see the statement. When you start purchase, make the decision to purchase, to put an offer in. So we only need 15 days in Canada side. So basically 6 months in Hong Kong, the money transferred to Canada bank only show 15 days in Canada. I can start the applications. So that will be smooth.
Wow, that is just the same. I have a question actually. One of my friend that lives in Macau, and she works in Macau, and she's a Canadian. So she's thinking of telling me, say, hey Ray, I want to buy some property here back home, and she's a Canadian.
Right.
So this is how the procedure, right?
Yes.
So now I can with Derek's help, see, I got solved one questions already.
Thank you.
Okay,
Thank you.
excellent.
I hope that answer you. Are most of the non-resident are Canadians or non-resident, not a Canadian, about the same. Of course, different situations, different things. If they are designed, they are moving back, they have a job offer in Canada, right?
Right.
Okay, so that's a different situation. If they are if they are income qualified, okay, so we can up to 80% or for the landing volume.
So even though they are not Canadian, they have a working permit, so they can there's a considered as a resident, right? Once they live over here for more than a year, is there a time limit?
Yes, very good questions. Working permits are
or student permit? It's the same thing, right? So
No,
no, okay.
no, yeah, they are very focused on. They must be have a PR part, so permanent residence.
PR.
Yes, if they are working permits, it depends. If it's only one applicant, only the work permits. We have, we really have to ask for the exceptions, but mostly they reject it. They prefer most of it. They prefer primary residence.
Okay.
Yes, yes.
So
That's kind of a PR.
PR
It has a
status.
PR, right? PR status. Yes. And just for the TD. And then, of course, our for non-resident, most are important part is they are, they might afraid. Oh, what? They might thinking, I have a job in Hong Kong, but it's better, we are right now. TD doesn't have to be approval can be done, but we need to
So
firm. So basically,
yeah,
yeah.
did I miss it that you said the TD was not are not going to provide pre-approval anymore?
Yes, for the non-residents. Before
Okay.
like 6 months, about like a year ago, we do have the our pre-approval done for non-residents. Yes,
Yeah.
we do, but they canceled it.
Uh,
Yeah, just about like within a year they canceled it. Yeah, that's a sad part, right? But of course,
Yes.
if I can see like from my experience, if can the clients have those document on hand, if you don't mind, they have a consent, they send it to my company email. I can definitely my from my experience to see they are qualified or not qualified. It's just a couple of things I have to focus on, and how much they are looking for the purchase, right? Is that reasonable, like for the what we call the total debt ratio, or the gross debt ratio? Is it a make sense for the ratio in line or not in line? I will share. I would love to share. Yeah, that part. But any or are more informations, I would love to share. For the approval part. Yeah, definitely. Yeah,
Okay, well, let's talk about that after that. I know every case is different, right? So
every
you have
case
to
is different.
customize for every different customer.
Exactly, exactly. Because if it's everyone is the same, I won't be here honestly. Because they can go online,
they can search.
like they can go online. They can just put down what they are working. They can send up the document out. It's computer can do it, but
Yeah.
I fully understand. I can tell you some are the situation, like non-residents. Maybe the down payment maybe came from our husband parents, right? Part of it. Some of the down payment may come of wife or sister, right? Um, um, or some of them may they sell the property, they sold the property in their home country, right? And then
Hmm.
this mm, you know is is not everyone they have the money just sitting on an account, ready for 6 months, ready to to do a purchase, right? Is everyone is really different. Job, they might are they are husband is are business for sale, is a medical owners in Hong Kong. Wife maybe working with the husband as an employee, right? So
Hmm.
this kind of things is not right. Very straightforward that this guy husband is working in IBM, strictly income, and the other wife is working in a medical nurse, strictly income. This is easy, right? It's just income. Look at it, right? So are a lot of things I really need to structure your case, how to present. The most important part, how I'm going to present, how I'm going to package, in our, in a good way for, for the client to qualify their mortgage. That's the most important part, right? And then they're happy, this part.
So
Yeah.
for today, there are lots of parents or relatives that
Hmm.
say, hey, a young couple who
Mm-hmm.
just got married,
Mhm.
and they don't have the down payment.
Mm.
So what happened is like like the dad is I'm gonna give my daughter some gift. So does that prove what if the parents is overseas and they say okay I'm gonna give you 300,000 Canadian as a down payment. So how do they prove that the money comes from overseas? Is that good enough that the money come from overseas, or do they have to see that the money actually came from the parents' account?
Right. Very good questions. Does the applicants already in Canada, right?
Yes.
So the money is just came from
Overseas.
their overseas parents.
Mm.
Definitely, we are definitely fine for it.
Oh, okay.
We the requirement is just we have to prepare for the gift letter.
Yes,
You know,
those are gift letter.
yeah,
Yeah,
gift
yeah,
letter,
okay.
right? So they how much they want to give it to the son, and to support to buying property.
Right.
But this part is only focused for the primary homeowners,
Mm-hmm.
right? If
Right.
they are buying the primary home
For
for
themselves.
themselves,
Yes.
which is okay. If they are buying investments, uh, mm,
Then you have
then we
my
have
another
to
problem.
we have to really think about
How to go
how
wrong.
does it
Yeah.
how does it the real situations. Yeah.
Okay. That's good. Yeah.
Mhm.
So I have a couple of questions here. Like, normally if I'm a new buyer, first time buyer,
Mm.
right? So I say, wow, the house is so expensive now in Canada,
Mm.
right? So how much down payment? Let's say I just got married, this couple, they have some money, but they don't want to use it all. So what would you advise them? Like, for example, John and Mary, they just got married. Now they have uh, buy a house or buy a condo or something, right? How many percent would you advise them to put down? But for the new buyers, usually they just thought that I got 10% I can buy or 5% I can buy.
Mm.
But is that accurate? Or
Yes, very good questions. Uh, I know recently, our Toronto market is booming, right?
yeah,
And the market think that is high has to be reasons because our for our Canadian bank is very conservative, honestly. We only have six, five, six, seven major bank
yeah,
major bank in here, very conservative bank. Why is good? It honestly is good. Some people may not good, but think it is good because they want to protect their markets, right? Not like in US they have a like 100 bank. They can do our second mortgage, third mortgage. They
yes,
can leverage a lot of money from the housing. We are not. Canadian is more conservative. The reason it's good is they try to protect the market, are in a stable market. Even right now the market is it's and some people think, oh, wow, so expensive, but it is not because most of the people they have is income qualified. They are really can support, for the mortgage or mortgage payments. That's the most important part. Even though like buying people buying a condo 600 thousands, right? So they are are if they are going for maybe 75% or 80%, for the
financing.
payment.
Yeah.
Yeah, the payment is just maybe 1,500 per month, around there, right? So two applicants, sharing is $750 for both applicant should be fine for it. They are really it's I mean, it's are comfortable for them to paying for the mortgage and they are owning the house. Very good questions. Regarding to how many percentage for the down payment should ready. If the two applicants very income qualified. Let's say they are one is making 80,000, the other one's making the 50 or 50,000 or 60,000. Round up is a 130,000 in a both income, right?
Yes.
So they can go for lowest like 90%, anything more than 80%. But the only catch is they have to go for our CHMC. So which is we have the CHMC insurance, the government, mandatory regarding to protect this mortgage, right? So they have to pay a little fee for the Canadian mortgage title. Sorry. So but they can go for, definitely they can go for 90% of the lending part. For the bank, it was really comfortable for doing so. Back to the topic, right? If the household income is a little bit less than what I talked about, let's say $600,000, 600,000 they purchase for the condo, and then they are making around 80,000, 40,000 each of the applicants, right? So they have to save a little bit more down payments, to in order for them to go for. So I would say around 80%, I would say 80%, 70%, I can do the lending for them, right? So 8,000, yeah, and the rest they have to come from 25% to 30%. They have to come from their own down payments.
Yeah, that is a good thing too, right? They avoid CMHC fee.
Yes.
So which is CMHC fee. Well, next day we can talk about that. What are the
we can
fees and
more
go
focus
from
on
there,
what is
yeah,
the
but
CHMC,
so people who doesn't know what is CMHC fee, you can find out later maybe on the website. But however, there's an extra fee that you need to pay on top, right?
Yeah,
so
anything lower than the down payment lower than 20%.
Right.
So yeah, it's a mandatory government need the applicants to to ensure that they can support the mortgage. So a little fee to support them to go for that amount.
Okay, Davina, do you have any questions for Derek?
Well, not here yet. I'm questions about new immigrant programs. It's quite different.
Oh, immigrant program. Oh, okay.
Yeah, it's quite
Yeah.
different with the before, right?
Mhm.
So yeah, so we are looking to step because there was more immigrants coming to Canada right now,
Exactly.
and it seems that the new immigrant program change all the time.
So has
Right.
it been, what is the latest update
Yes.
on immigrant?
We have our right as of right now, we for the new immigrant program is still 35% down payments, same as a non-residents. But the more lenient is they might using different scale to for the Canadian clients. So basically, what I'm saying is if they are looking for 700,000, right? One plus one condo then, right? So they only maybe have one applicant or both applicant just start within 5 years as a PR permanent residence, right? They can they can apply for the newcomer program, so the new immigrant programs. So
Yeah.
because the reason is because they are just came to Canada 1 to 2 years, right? They may not, or the income might not as same as back home, right? So we are as a bank, we want to, we want to help them, right? So the measurements of the Canadians using as a regular income to qualify the mortgage, they give them a more lenient. So it's like around if they are going for 700,000, right? So if they are making around 50,000 for one applicant, the other applicant maybe only 20,000, right? 70,000 may cannot go for 80%. No, I mean are 65%, right? So, but we are more lenient to approve that because it's a new immigrant. Yeah, or even though just making 50,000 to going for our 70, 60 around around half a million, right? So we might go for that scale, right? So basically, new immigrants they need for TD, right? We still need they have a Canadian income too.
Got
Need
it.
it. Yeah.
So they have to find a job first.
Yes.
Even
Yes.
though if it's just 6 months or 3 months, as long as
Yeah.
they have something.
It depends the client situations. If they back at home, they are as an IT professionals, right?
Right.
So
Mm-hmm.
they just came to Canada for the first second years, right? So they start with
Mm-hmm.
maybe they just start with IBM, right? For only making 50,000 as a customer service, right? It's
Mm-hmm.
related, but they need some time to in order for them to catch up, like kind of catch up their
Yeah.
back home income. But we can still use their own income to support our case in order to fight the amount. It really depends how much they purchase, right? But 35% is must down payments,
Mhm.
or
That's possible.
yeah, 35% is must down payment. They have to show from their own, or even a gift is fine. So this is the new immigrant programs, right? Yeah,
Mm-hmm.
and
So yeah, and I have a question now. Let's say if I'm a new immigrant here now,
mhm,
and I look at a pre-construction
mm,
condos.
condo, right?
So now I say, hey, the condo won't be ready for another 3 years, right?
Mhm.
So how do I go? I only have within these 2 years or 3 years, I have 20% down
Mm,
that I'm gonna put into the developer.
yes.
And when I go to TD
Mhm,
as a new immigrant,
mhm.
do they still need me to come up with 35% within that 3 years period before closing, or how does that go?
Mm, yes, very good questions. For qualify, we have called the builder cap programs. So
Mm-hmm.
which is helping people, are they are doing the constructions purchase, right?
Right.
So regarding, there would be a 3-4 years, I think time. So what we are looking for, we are looking for the clients, are they working right now? Are they
Okay.
reporting tax right now? So the down payment part, of course, is for mostly it's like builder they require is 15 or 20% for the down payment, right?
Right.
So from the schedule, um, uh, we are more or less to look at it. We are more focused on the income.
I see.
Yeah, to qualify for the landing, right? So they are putting the 20%, 80%. They are more focused on the income qualify for the 80%, right? As a new immigrant, right? So as I said, it really depends the client backgrounds, right? If they are IT professional, they are they have medical nurse, they just came in, because they need to or take some time to back to the school, get the licensing done. We still consider, right? They are engineer back then, so they are very focused on the professionals, right? So which is we are definitely help to structure the case and get them to approval. For our builder cap, for the construction, the maximum we can go for is the 3 years. Yeah.
So for the investor, now from talking on the other side,
Mm.
investor who is going to buy like a condo, they just want to buy a pre-construction condo, right?
Right.
So now it's a different scenario, right?
It's a different scenario. Yes, very good question.
Now we have this link from let's say from Hong Kong.
Mm,
They are still in Hong Kong, but they have some money. They
Mm.
want to buy some pre-construction here in Toronto.
fantastic. This is wonderful for TDs. We are the only bank that we can do a non-resident refinancing.
Oh.
Big example. If the clients in like in Hong Kong, China, they already have a property here, right?
Yeah.
One property, but they want to invest one more, right? But they don't want to, take up money in Hong Kong or, to transfer in here. They can do a refinancing the existing property in Canada, and then use that funds to cover for the pre-construction payments, and then at the same time I can apply for the mortgage for the
Right.
new pre-constructions
I
home.
see.
So which is TD only one can do not for the non-resident refinancing. None of the bank will do it. Yeah, so TD can
Ah.
do. So yeah, This is very, every other bank, they focus on, you know, different type of clients, right? So we are focused on helping the non-residents to do a refinancings, right? Yeah,
Hmm.
yeah.
Any questions, Davina,
No,
for
not
Derek?
right now.
Okay.
Not right now.
Yeah, yeah, okay. So I have another question here is like, sometimes we just wonder, as a here young couple, we just got married, and then all of a sudden I say, hey, how do we know that we'll be able to qualify for a loan, right?
Mhm.
So even though we work, but sometimes we have mistake, young people, they don't know they have bad credits, they forgot to pay their credit cards.
Right.
How and but they do have income, but their credit score is already bad. Does that mean that if they have a bad credit that they cannot get a loan?
Hmm. Yes, very good questions. So for me and the underwriter to approve, the deal, they focus on the client behavior. So meanings that if the person have a bad credit, I have to know. I will do the KYC, know the clients, are to understand the client. What's the reasons why they have the credit, to have the low credit. So I have to know. Some people they might, are they go on the vacations, right?
Yeah.
And then for 2 months, they just forgot, really have no time to, forgot to make that payment, or they already have the prepayments. They are, the bank side, or some of the, are, the system doesn't, are, they reject the, payment. They might, this kind of thing, they might, or, they might affect the credit. Or some people, they just, they are, they clear the payment every month, every month. But they just utilize, like, you use over the limits, but they make the
Yeah,
payment
yeah.
too. That would be affect you. It's
Oh.
really depends on the situations, on the client situations. But for the minimum credit for TD is to apply is 650 for the credit score.
Oh,
If
okay.
anything lower than 650, those people, maybe they are newcomer. They're newcomer is fine, right? They start with 500, right? It's brand new credit, so which we understand. But if they have in
Been
Canada
here for a
for
long time,
many
yeah.
years, they still have a weak credit score. So it has to be reasons. Some people, they might, they never start with credit card, they never apply any credit. So that may be not, too strong, because to build up the credit, they have to be apply revolving credit. They have a line of credit. They paid every month. By the due dates. Credit card, they might sometimes they use it, but of course, not everyone they do. Some people, they have been 10 years, right? They just using a debit card to make a payments, right?
Yep.
They're never gonna
Mhm.
use a credit card, revolving or line of credit. They're not applying any mortgage. That thing can make them weak credit too. But we definitely, this is not the client fault. This
Mm-hmm.
type of client is still as a good client for us. They just have a weak credit. I will explain to the underwriter what's the reason. If the clients insist, like they are, they purposely don't want to make payments. Happily, I'm make, or sometime I make, sometime I don't want to make. I just feel I want to make. This is not good behavior for this type of clients. Bank, this situations, is might not as good. They have to change the habit for, because you borrow someone, you want to make the promise. So this is kind of agreement to every single bank, so they will look at it. Of course, some people, they have a bankruptcy before. Of course, some people start with business, they have a difficult times, go on the bankruptcy. But they still making the payments. We can explain, we can try to build up the, good credit for them. It really depends how the situations for, every every type of clients. But I would definitely
so that the bank will still consider, right? So they will still consider your application. So it all depends on how you uh, misuse the credit when you were like maybe. So it goes like, I know the credit goes into a few years, right? So maybe as sometimes when they're 19, 20, they get their credit card in college and they thought it was fun.
I have
and
done
forget.
before.
Yeah. So they
Yes,
forget, right?
yes,
and
absolutely, yes.
they just don't care about paying them. And then after when they graduated, they notice, oh, my credit is bad because I was in college now, but now I'm working. So normally, during the school year, and then when they work, people tend, kids, right? When they grow up, is a growing stage. But the bank will still consider them, right? Once they are 25 and up, when they're working, even though previously their credit wasn't good, but it'll be getting better as they pay off, right?
Exactly.
Yeah.
So how does, because most people never educate for how they build up the credit, right?
Right.
Not from the school, it's just maybe just from friends, or from the very experienced rate, can share with
Family.
them. Yeah, but normally, from university never taught us how to build a credit. But the things, if you know someone how to build a credit, it is very easy. Just make your payment on time or make it in advance. The credit score is based on a couple of things: revolving part, your credit part, and then the mortgage part is definitely. So they are focused on these things. If you making payment, if your credit card, I believe is a 35% out of the total score. So if your credit card made it in 21 state advance, meaning that if you're using, use your credit card, go on the gas stations, you do it online and make it, make it a full payments, it will increase rapidly your score, right?
Okay.
Even though they have, missed one payment before, you want to build it up, it's okay. Coming this couple 1 to 2, 3 months consistently, make your same day payments. It will catch up it will, get back your credit.
So there you go. That's very good advice for the young people who actually, try to improve their credit cards or credit score. So it affects on the home buying process, right? So this is very good. I have one more question.
Yes.
So for today, we have so many things that, the interest is like going up and down, a little up and down, even though Canadian mortgage rate is excellent right now.
Yes.
And
Fantastic.
you can tell us a little bit what is the rate currently TD is offering. Of course, a little difference in different bank and also other financial institution.
Right.
Yeah, and also you can touch a little bit on fixed rate and variable rate.
Yeah.
What's the difference?
Right.
Some people don't know what that is.
Exactly.
Okay.
Right now we are enjoying very like a honeymoon time. The rate is very low. That's why one of the factor that's market is very strong. It's only one little factor, but more factor make it strong. Right now TD definitely is a very competitive from the other bank. As I can tell you a little bit, it's just right now, and if you're choosing 5 years variable, it depends the volume, right? So larger volume, the rate is lower. But always, like if you have, maybe RBC can offer you, CIBC can offer you some of the rate, let me know. We can, we can get the approval from the back office to get a very competitive, even though lower that rate for you. But
wow, you can beat the price.
Yeah, we can beat the price
compare.
definitely. Yes,
Okay,
definitely.
good.
And as of right now, we are offering for the 5 years variable is between 1.35, around there. So it's amazing, like it's low. But some of it depends. Some of the clients, are they have they got some offer. I can definitely fight the rate for you. So if you have a strong client type, of course you have a investment outside. You are from a wealth. I never have mentioned about the wealth. We have the high net worth program too, which is helping the client, which is as they are living in Hong Kong, or they have they have they sold it, like they have a large of money. They have our high net worth client is a half a million over. So anything more than half a million savings, liquid savings.
Okay.
And then we can apply for the our we call the high net worth programs. So it might not using, of course this may start, just a regular income, so the ratio is really different from the, usually, they are using their income times 5 times 6, right? Basically, so basically, if the clients, have 100,000, right, in annual income making Canada, right? So usually borrow, half a million, right? For the high net worth, if they have a high net worth over 500 million, right? They can scratch up to or over a million, applying the double up the market. It really depends on the situation and what type of clients, right? So the saving part also is important too. Don't think that, I'm just self-employed to start in Canada, right? Moving back, but all my stuff, graduate to grow up. But I have I have a great saving too, and I can't over a million, over 2 million, but do I qualify for 1 million, 1 million mortgage? Is that possible? Buying the first one, yes, you might possible, right?
Yeah, because you have the saving on the other side.
Yes.
So you already prove that you do have the money
Strong
to,
asset.
you have the strong asset to get another.
To qualify that mortgage too.
I see.
So we do have all different kind of program too. So I would love to share, to next time, or directly to contact me. It really depends the situation of clients. I will give you the great advice.
Okay, so Davina, before we go off, anything else? You have questions for Derek?
You already have all the questions. I
I
think
have all
I'm
the
good.
questions, right?
You
Yeah. So basically, again, and I think Derek forgot to touch a little bit on the variable rates.
Oh
Yeah,
yeah.
yeah. So
Yeah,
you
so I
talk
can
about-
little bit share for the variable and the fixed difference, right? So if clients, I just mentioned about the 5 years, 1.35 for the 5 years variable, right? So if client choosing a variable, anytime they can, if you're using TD, anytime they can change it to the fixed, right? But it's as I said, always depends the client situation. Some of the clients they are buying they're buying an investment, right? I would suggest them to take the variable because of they are the kind of the penalty is huge different from variable to fixed rate. One is the maximum 3 months. The other one is the rest of the contracts of the interest. So it depends how long they are choosing
the term.
the terms, right?
Yeah.
And then when they are terminate the term, terminate they might sell the house, they are changing other investments, or they are they find out other bank they can offer much better lower rate, or the market is dropped. But I tell you the truth, TD, we do have called the replacement program, which is if you have we're choosing the variable right now for 1.35. 6 months after, the market is dropped, the rate is dropped, that time is 0.99, right?
Right.
So I can do the replacement for you. We can do a refinance for you, try to increase your line of credit, and then for the replacements, which is we can absorb the penalty.
Wow.
The 3 months. So you can enjoy, you can break the contract, even though you sign 5 years, variable 1.35. And then, because it's job, right? But make sure your term is still variable term. We can, replace the lower rate for you.
Yeah, but I think the audience needs to know that what if the interest go up?
Yes.
The reverse
age,
now.
of course, the reverse, the rate is go up, right?
Yeah.
The rate is remain the same 1.35, but if the situation is the prime goes up, it's different. Variable means if they are according to the prime.
Right.
But, the prime is not always up and down. It's not like a mortgage rate.
Right.
Mortgage rate can go up and down, like, a little bit like a stock, right? Prime rate is steady. This is what I think is very stable right now. It's not gonna, or it's not a huge change,
Not much,
not
right?
much,
Yeah,
right?
it's quite
very
stable.
quite stable. So yeah, of course you can do a lot of research, according to that, but definitely this rate is over in 10 years, it's the lowest time.
Yeah, but I always think that when you have variable rates, the payment rate might varies a little bit up and down. Yes or no?
Oh
or
no, the
just
payment
fixed?
remain the same.
Remain the same,
Remain
right?
the same.
So the client
Even
should
though
know.
the
Yep.
prime goes up or goes down, your regular payment would be the same.
Mhm.
But if they are changing the prime, they might affect the principal and the interest ratio.
I see. Yes,
So if
yes.
it goes up, the ratio or the principal go pay less, right? A little bit less.
Right. When you go
Yeah,
down,
so
your
the
principal
whole
increases.
increase
Yeah.
more. Yeah.
So that means you pay off faster.
Yes,
Yes.
the pay off faster.
Right.
Yes.
Good. Okay, Davina, it's been a great night to have Derek here.
Yep.
So, Davina, any last questions?
Not right now.
No, right now. Okay,
Yeah.
excellent. So, very happy to have Derek and
Thank
Davina here in this program. So if you guys have any questions, you will see our number there, and as well as Derek's business card. I think they posted over there as well. So you can call Derek directly, or you can call us. We can always, send you over to Derek. If you can find him, I will find him for you. Okay, thank you.
Thank you,
So
Ray.
thank you, Derek.
Thank you,
Thank you,
Derek. Thank
Davina.
you.
Okay,
Bye.
now the time is up, and thank you. We'll see you next week again. We have more program coming up, so probably we'll see you. Okay.
Thank you.
Good night.
Thank you. Good night.
Bye bye.
Bye bye.